It finally happened. After years of debate, legal battles, and speculation, Bitcoin ETFs have officially been approved in the US, but what does that really mean, especially for you, the everyday investor? Let's break it down simply, no fluff. First, what is a Bitcoin ETF? ETF stands for Exchange Traded Fund. It's a financial product that tracks the price of an asset like gold, oil, or in this case, Bitcoin. But here's the twist. With a Bitcoin ETF, you don't have to actually buy Bitcoin yourself. No crypto wallets, no seed phrases, no worrying about hackers. Instead, you buy shares of the ETF, just like a stock. And those shares reflect the value of Bitcoin. It's crypto investing made traditional. So why is this such a big deal? One word: access. Until now, investing in Bitcoin required navigating crypto exchanges. For many, that felt risky, unfamiliar, even shady. But with ETFs, Bitcoin enters the world of retirement accounts, stock trading apps, and brokerage firms. The same places people buy Apple or Tesla. That makes it easier, safer feeling, and way more accessible to regular investors. But here's where it gets interesting. When Wall Street gets involved, things change. Now, big financial institutions like BlackRock, Fidelity, and Vanguard can offer Bitcoin exposure to their clients. That means more money flows into Bitcoin, potentially increasing demand and, yes, the price. In the short term, we've already seen price spikes just from the announcement. But long term, it could signal Bitcoin's graduation from fringe asset to a mainstream part of investment portfolios. Now, let's talk about the small investor you. Here's what this moment means. Lower barrier to entry. You can now invest in Bitcoin through platforms you already use, with fewer technical hurdles. More regulation. These ETFs are approved and monitored by the SEC. That adds a layer of credibility and oversight. Reduced risk of self-custody. You won't be responsible for storing your crypto. That's a huge plus if you've ever worried about losing access to your Bitcoin. But also, you can't send it, use it, or store it. You're trusting the institutions behind the ETF to do that. You're still not buying actual Bitcoin. You own shares of a fund, not the Bitcoin itself. Fees. ETFs usually charge a management fee. It's small, but over time, it matters. Always check the expense ratio. So, should you invest? That depends on your risk tolerance and belief in crypto's future. If you've been curious but hesitant, this might be your safest entry point yet. If you're already in crypto, this could be validation and volatility. But one thing is clear, with ETFs now live, Bitcoin just took a major step toward becoming a permanent part of the global financial system, and that changes the game.